The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here. This is the Wednesday, the 18th edition of the Tiger Technicians Hour. Oh, this is interesting. Dow's up 138 at 43,588. It's had a straight down look. This is still a single leg A to the downside from the 45,073 all-time high on the 4th of December. So people always say, gee, why do you always focus on the Dow? Well, I focus on the Dow for 40 or more years, given a daily call on the Dow. And this is the first time that I can recall three things. Number one, at an all-time high, at a peak C, the Dow is hard on the daily chart. The Dow has hardly ever failed. And I don't know if this is not failing because the starting point was at 41,647. But it is really unusual. So if the Fed says anything that allows the market to kind of free itself up to have another spurt that actually lasts so that the December candle is a very positive candle, doesn't have to close at the high, becomes a very, very positive candle in terms of its being red right now, and it actually closes maybe halfway in. That'll be quite an achievement. But number one is peak C failure would be unbelievable if it goes under 41,647 with that top there. But two things. One is that the E-mini, so the ES futures, has gone to a peak B. There's no other way I can count that. That's also quite unusual. But in the futures, that sort of thing can happen. But it's really unusual. Daily chart, all-time high at a peak B and fail. The third thing is VT. VT is the Vanguard Total World Stock ETF. United States stocks account for about 49%. Leg D in the monthly chart with the Chapman wave cup and ladle breakout pattern. And in fact, it could even be a C because I used the two highs that were made back in September of March of this year of 110.70, and the next month was 110.74. I used that as a phantom peak to say it was so close. I had a little turn down in the on-balance volume, and that suggested I could use it if needed. I don't really need it because it's still a very strong monthly candle. There's a little double top in the on-balance volume. The weekly chart has gone to a leg D, maybe a peak D this week. And the daily went no other way to count it. It's gone to a peak C. It hasn't pulled back like the Dow. Dow's had, 9 sessions, down sessions in a row with lower lows and lower highs. I can't. It must be the 1990s or 1980s that I ever remember seeing something like that. Anyway, that's very unusual. But this is to fail at an all-time high in this world stock ETF. There's a real good chance that over the next 2-3 weeks, it actually gets to a higher high, even if it's not very much higher, or it gets to a peak C1, C2. But the 123.64 all-time high of the 9th of December will get close to challenging that. That's what I'm thinking right now. I don't want my thinking now to get into the way of what we actually have in reality. So let me go through this again. Look, here's the Dow. Dow up 136. It should be up 236 right now after the pounding that it's got. Well, the day's young. If at 2:45 this afternoon, the Dow is up more than 280 points, 320 points. I think we've got a decent rally, and that's going to say to me, I need to go into something. Oh, I said three things. Let me just finish that up. So the first is fading at a peak C. The second is that the Dow, the mix of the Dow is such that the weighting with the yields with certain of the stocks just getting hammered. I mean, if we're looking at, what was it, SHW yesterday, Home Depot, look, Sherwin-Williams up 59 cents at 363. Look at Home Depot in the Dow. a lower low today again. So that particular sector relating to construction, etc., that's been really hammered quite badly. And then you've got the healthcare. Look at United Health, UNH. UNH, oh, wow, an update today, up 13 at 499. But what a move from 630 down to the 479 area in one fell swoop. So that's been impacting the Dow. The third thing is that within the context of the overall market, those weekly and monthly charts are still suggesting to me that unless there's absolutely in the next, going into December the 31st, which I think is a Wednesday, a Tuesday. It's a Tuesday, 2 weeks from today. What was today? Wednesday, 2 weeks from yesterday. Is that right? Whatever it is. What we're looking at is there's a chance. When I look at the historical context in the back of my mind, I'm always thinking, if the Dow can come back after the September-October smash to the downside, which it invariably has, and at the first week of October to the first 2 weeks of November, if it's back at that year's high or close to that year's high, invariably the year closes very well. Very well doesn't mean to say at the highs it could be, but it just closes very well. There isn't that huge sell-off at the end. So that was the third thing. So here we go. Let me go back to this. I'll do one more time. Dow up. Now it's only 119. S&P, SPX. S&P is now up only 5. Struggling. But the 9 is still over the 14. It's within this context of a Chapman Wave inside track propellant zone. If at any point in the next, going to Monday of this coming week, it goes under 6,000, that's a big problem because that'll say to me you've got a sell signal, maybe going to a sell mode in the daily, but that weekly chart is still very, very good. And going sideways with narrow, that usually lands up that you might have one little pop to the upside, but you're probably going to come down because it's a form of distribution. I'm watching that closely. We do have a short position in this. It's more insurance that we got. Very tight stop, and that'll just disappear if at going to the 2 o'clock to 2:45 time frame, the S&P is up 25 to 30, and the Dow is up, as I say, 325 or higher. And we have a whole plan for what happens this afternoon. What happens if it's up, what happens if it's down. Let's go on to the QQQ, because this one here, you can see the stochastic flat at 92% is really good. On balance volumes pull back. MACD is good. The gray relative strength index really good. And it's just a minor 2 days so far after the big candle going into Monday. The Monday's all-time high of 539.15. I might as well just type that in, 539.15. 539.15, there we go. Okay, 15. And I usually make that in gray because it's not that important. It's just to remind me where we are. So let's just make that very quiet there. And leg D in the weekly, leg D in the monthly, and all of those technicals are still good. Oh, man. So now we've got the IWM. Is it giving back some? Yeah, it's giving back some. Now it's red, even though it's up 36 cents. So when I'm looking at this market, I see residual strength, rotational residual strength, and then I see stocks that have no gumption. They have no oomph to the upside. They're just making lower lows and lower highs. I'll be back because now I want to talk stocks when we return, but I also want to mention Bitcoin.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, we're back, and the Dow's up 121, S&P's only up 4.5. Bitcoin futures continuous contract linked in the Chapman. Let me just show this. I haven't shown it for a little while, and it's really important to my work. So let me just do this right now. If I could just lift that up, and if I can just go to that there. So in the Chapman Wave methodology, we try to identify the lowest low bar, count each successively higher peak. They get alphabetized sequentially on the way up with an uppercase letter, on the way down it's lowercase, and it goes peak A, B, C, D, E, F, and G. But D, the fourth highest peak, is the objective. Once you get a buy signal, that's upgraded to a buy mode. And at D, other things can happen. You can have your sharpest decline. You can recycle to a higher high and make an Chapman Wave instant restart, which says you could go to another 4 higher peaks within that context. That's really important. So what do we have here? We have in the Bitcoin futures from the low that was made just above 20,000 in, that was, I think, at the end of 2022, maybe it was November, we've gone peak A, B, C. There was a Chapman Wave cup and ladle breakout pattern here, but then it stalled and it went into the handle. So it became a cup and handle, not one of my favorite patterns, and then spiraled high. And the objective here is to get to a D, and you're at D. Leg D at an all-time high yesterday. The weekly chart had this cup and ladle pattern, because this is now, this handle in the weekly chart is really what we're looking at here. And there you had a break above peak B going to C. They went powering through the left side high for a Chapman Wave cup and ladle, one of my favorite patterns. I always put in cup and ladle to D. We went to a C, then went to a D, and now it's in leg E in the monthly chart. The technicals are all very strong. Look at the MACD. Look at the stochastic at 94%. On a very short-term basis, you can see that that was an E right there. Then you pull back, had a gray A, and that becomes F/B, G/C, and invariably a G/C says you should make a little cup pattern or a V-shaped pattern and have an attempt at least to get to the D. So I'm looking at this, and from everything I'm looking at on the shorter term, I'm anticipating that Bitcoin, and we've been long for a while, is starting to make some kind of topping action. I haven't got the signal yet, although right now as I'm looking at it, I can see I can join these highs right there, and then I can put in a Chapman wave inside track repellent zone. I'll just draw it in right now. Usually if you get 3 highs like this, then you got to be careful, because this is where you could get a reversal to the downside. Haven't got it yet. It's still very good. Got it today. It's only down 2,000. When I looked earlier today, it was down over 4,000. So it's at 104,415. The high yesterday was 8,960. And it had a round number, 106,000 round number low. So I'm watching this and I'm saying, there's a sign, because these round numbers, it doesn't matter that you're up in the 100,000 area. They're, to me, very important. Look at Amazon, made an all-time high of 233.00 3 days ago, hasn't taken it out yet, although there's nothing wrong with the chart. It's looking great, but I just make a note of these things. Now, a couple of things. So I want you to just give you an overall picture of what I'm looking at in the various areas. What I am upset about is that the XLF has pulled back very sharply. Well, it's taken time more than price, but it has pulled back underneath that big spike that started back in late October, and now it's trading from the, why did I not type? I think I did type it in, but I lost it when I had to recalculate that. So the high that was made on the 28th, is there such a thing as the 28th, or was that a holiday? 27th, 51.62. We're down now at 49.22. It's not a big deal, but it is a big deal in the context that the S&P Select Financial Spider Fund, so these are the money center banks, have stalled, and they've stalled with the candle right here at F/C in the weekly chart, suggesting there's some digestive action going on. Most importantly, we're now out of our KRE. That is S&P Regional Banking ETF. We've taken some profits, very tiny loss in the final pullback yesterday. I don't know why. It's a little different pattern to the XLF, but look, it's more like the Dow. It's just a concerted effort. In fact, if you're looking at red candles, there's one green candle. They had a lower high. So look at this channel. Now, I don't usually. If you do channel lines, you've got to be very objective. Look, that takes you right through your support levels. That's number one. Number two is I like to find the key wicks that are being hit. I can hit the candles as well, but I prefer to go for the wicks, the outer points. And if I do it like this, look what we've got. We've got a down channel that says, wow, when you have this many bars, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 bars in this down channel with lower highs and lower lows, there's got to be a spike to the upside. Well, what's fascinating is the 9-period moving average crossed negative in the daily chart. Weekly chart is still strong. So what do? I did not want, after having profits, I did not want to sit with a loss in the KRE. I'd rather be looking at it if it turns around and buying higher highs and higher lows than trying to pick a spot, because the stochastic's flat at 9%. Remember, flat and is really important. If you are negative and it's flat, that's what you want to see. I'm not negative. I'm just looking at it. But look at this. So as an example, let's go to, let's just go to the QQQ. Look. The stochastic is flat at 92%, and it's acting well. That's what you want when you're bullish, or if the chart is in a buy mode, and that's exactly what you're looking at. So yeah, we go back to the KRE just for 1 second, and then there are a bunch of things I want to look at. So looking at the, here we go. I just wanted to check because there were some questions here. Basil, the GC on the 240-minute is set up for an ABC down to near 2630. Would you be a buyer if that pattern occurs? So let me go to the GC. I want to do things active right now as the calls come in, because we've raised cash. We're looking to be buyers on a particular type of decline. I'm a little cautious here. Let's see. So I've got 120. So let me go to my 100. You've got the 240. I've got the 120-minute chart, but I know what you're looking at because I looked at it the other day. Oh, I lost all the notation. Darn. So this is the pattern that I was looking at. When was it? I think it was during the week. So it must have been Monday. Oh, and I had it all notated and everything, but I had to shut down, and I thought I'd save, but I guess I hadn't saved, and I lost a whole bunch of data. I got most of it back, but some of it's popping up here to say, you didn't get me back, and that's really upsetting. It's not TradeStation's fault. I wish they would. Everything you did was saved. That would be fantastic. It's not, and I don't always click save, so all I can say, okay. So let me see. So we've got YOY in the den, and we're looking at this low right here that was made in gold, the continuous contract at 22. That's at 10 o'clock the evening of the 5th of December, and the low was 2635.6. So your question was 2635. Okay, we're in the same boat. I'll go through this chart in a moment.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Kickstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Kickstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Yeah, so I'm looking at this year's gold. The 120-minute chart went to peak D, pulls back, goes to peak E, and has come back. So I've got a left side, right side price time match to this candle right here. And that just, if I draw it in with the Chapman Wave inside wedge target support line, I'm taking it from there all the way, it'll go right there. And then usually what I do is I say, I'm just going to treat that line as a trend line support, and I'll find a peak right here on the left. This is where if you did it on a computer or program, it would really be hard to program. This is by eye. Look, it tells you this is great support. And it says that by 2 o'clock on the 19th, 2 o'clock on the 19th will be tomorrow, there could very well be a test in gold of the 2635.6 low in the continuous contract that was made back on the 5th. So it's taken all this time. It's made this very big arch formation. It's more like a lowercase h that went to a lowercase m. If it bounces, it needs to get above 2663 to be able to even have a chance and hold there, to have a chance of getting back to the 200-period moving average. These moving averages become very important when they demonstrate that they are support resistance levels. Here it went held for 3 bars, and then it broke down. Here it held for a bunch of time, and then it broke up. So that means the 2681 area is key. So yes, so the question is, let me just go through the question again. On the 240-minute, I got the 120. Is set up for an ABCD down to near 2630. Would you be a buyer of that pattern? So this is what I'm looking at here. I would not be using just a purely technical indicator to tell me, yes, I've got to get in at that particular level without reassessing. Because, look, if it comes back down and it takes out these lows, that's 2635, and then back on the 26th of August, it was 2629, you're becoming vulnerable to that big candle, big green candle, all the way in the 20s, from the 2630s down to the 2590s. So I'd have to wait, because the MACD is negative, stochastic's negative, on-balance volumes are negative. Right this moment, I have to wait for the end of the day. The 9-period moving average has gone negative. So I don't know if I would want to be. And remember, I spoke to you, I mentioned this earlier, that I think that the whole idea of gold pulling back, of crude oil pulling back, although today it's running a little bit, but just not being able to break out, and GD, this is General Dynamics, that whole perspective of the relationship that I look at personally of how gold and the commodities essentially and the Middle East tensions, you can see that in the charts, and the charts are saying right now we've had a huge pullback by these defense stocks. So I wouldn't be a big rush to buy. Now, what I would say to you is use your technicals, and if this is a position that you are liking and you see gold going down to the 237 to 35 area, let me just double check here to get that price right. I don't want to give you the wrong price because it's a continuous contract. Yeah, the 35-ish area. Give me a yell. Let's look at it together. But I would say if that's what you like, you could start a position there. But that shouldn't be. It's making lower lows and lower highs. I would prefer to see higher highs and higher lows. So the trend is down. So it has to really prove itself. So I wouldn't be aggressive. I just say that's an area I'm looking at. Then let's look at it together. Next question came in here. So we're looking at Yes. So, so the Dow, as I said, let me just go back to this. I'll just go to the futures for a second. So the Dow futures, see, that's a better candle. Now we're getting somewhere up 199. So the way I'm looking at the market, the way we've planned the strategy is that if after two, it might even be before. Now, there are occasions, they're not that often, but there are occasions historically where the market has anticipated the Fed to do something, had a huge rally the afternoon before, had a huge rally that morning, and then everything worked out fine, and that rally just rocketed afterwards. It doesn't happen that often. So this was some weakness, and now we've got some kind of strategy that says, but I'm just looking at the chart, and the chart says, you see the stochastic at 6.82 in the Dow, but you see that it's trying to make, with the on-balance volume, a V-shaped turnaround. If by Friday or Monday, the stochastic has gone from 6.82, it was actually at the 5% level, can rally into the teens, and then by next week very quickly going to the 22, 23 area, you're going to see a really good rally in the Dow that takes it. And I'm using the Dow now because it's the pattern that didn't get to a D and had a huge pullback from a peak C. I can't even tell you how unusual it is for this to happen. I have to count them: 1, 2, 3, 4, 5, 6, 7, 8, 9 candles to the Dow, 9 days, consecutive days with low highs and low lows. And this is really the issue, while the QQQ has gone to highs, all-time highs. So that's very unusual. So I think there's going to be where we might see a little stalling with the big NASDAQ type stocks, maybe. I mean, you can even see Microsoft stalled a little bit, it was doing fantastically. I just wanted to see where it was. It hit 456.16, all-time high is at 468.35. Back in July, it's just really stalled, and now it's making high highs and high lows. There's a chance that Microsoft will actually get to an all-time high. So you can see the rotation that's going on. Amazon, well, the round number that we saw at 233.00, it's just an eye blink away. It's at 230. Just one little pop and it takes it out. But it's a hint. So I'm looking at this and I'm saying, my gut tells me that we could have another rotational move. This time you have the laggards like the Dow, maybe the IWM, maybe even KRE. That's the regional bank stocks start to move higher, and they can have a decent rally into the end of the year playing catch up. That's what I'm looking at. That's why I don't see a major collapse right now. I just see a rotational correction. I've been talking about it for a while. Got that out the way. Now there are a bunch of things that I was asked about. Let me get to it. Yeah, Robinhood. So we've done nothing yet. We've had really good gains. We got in. Look at this. We got in right. The low was 13.98 on August the 5th. The very next day, we've been waiting and had patiently waited, and the very next day we got long, and that's in the 16s, and here it is at 40.19, having a little bit of a breather. That could be a PGF. Maybe there's a rotation. Maybe it's connected to the Bitcoin.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Folks, so Pat McDan says, given the Dow's construction, it's not benefited from the tech rally of the Dow's 30 stocks just for Amazon, Microsoft, Apple, and NVIDIA are members of the Mag 7. No, we've also got, of the Mag 7, yes, but we've also got Cisco. So let me just show, I just wanted to show you this chart right here. Here's a V-shaped pattern. The 9-period moving average went positive again. It went right through the 200-period moving average. And now it's trying to get back to the high that was made, not the high of earlier, but at 830, 614.25. And that should happen over the next 20 minutes or so. Let me go back to this. So yeah, just look what we're doing here. So I have called this for Robinhood. It's a leg D in the weekly chart. That's what we always look for, remember? That's where other things can happen. It's a leg E in the monthly chart, but the 85 round number high from August of 2021. Yeah, that's, as far as I'm concerned, that's the goal. Once in 2025, Robinhood starts to trade for, I'm going to give it a month in the above 19. As soon as it goes above, did I say 19? I didn't mean that. I meant right there. Yeah, above 62. If it can, even a week, if it closes above 62 for 1 week, it says in 2025, the target will be 85. But it has to do that. It's only now at 40. So it's a long way to go. It's got to get another 50%. But on the very short term, Robert is giving me a clue that possibly we're looking at the Bitcoin. I'll go there one more time. That Bitcoin is starting to stall, and that this inside track repellent zone, which says you can go all the way to, well, it depends when, 109 to 100 and just under 110,000, and that could be a stalling area. So that just says to me, all right, keep your eye on that. Let's go back to Robinhood, because this has been pulling back. But the IAI, and this is to me the clue that I was looking at a really mixed market here. This is the ETF for this is the iShares broker dealer ETF and securities ETF. Goes to 154.38. Look, it's taken time, not price, to pull back, but it was at a doji, 2 doji candles at an all-time high 4 weeks ago. So this is just saying to me, this is the rotation that I'm talking about. So let me just also look at Cisco for a moment. So Cisco's done really well. It's got a pattern that says in the cup formation, the high that was made back in the 64 area, that was in 2021, November, I believe, and then plunging down to the 37s. Now trading at 60, it's just a slow move up with higher highs and higher lows and a sharp from peak C pulls back. And now it's a single leg to the upside, a leg D, a D in the weekly chart, a D in the all-time highs right here at 60, at the most recent high, 60.23. That day it had, a 60.00 round number. Was it that day or the next day? I think it was the next day. Yeah, the next day it had a 60 open, and then it pulled back all the way to the 57s. So I agree. So those haven't been helping. But what's really important is that if we do get this rotation, it's going to be a rotation. Now I need to talk about this. The TLT has gone in this pyramid straight up, almost like an Eiffel Tower, straight up, straight down to a peak D, pull back from the 95s, just almost straight down, and it's trading at 90 right now. Still weak, down 61 cents at 90.03. And I was listening to Tommy interview Teddy a little earlier on in Tommy's morning market kickoff. And what we were listening to was Teddy saying he sees inflation very high this first quarter. Well, look at this. If you're looking at CC, which is cocoa contract, all-time, I don't know if it's an all-time high, but at least in a multi-year high at 12.38. The weekly leg B is only a leg B, and the weekly chart is a leg E, and the monthly chart is a leg F. And that just says, and it could be an instant restart, that is huge. If you're looking at coffee, it's had a very good rally, but it's kind of stalling here. That cocoa hasn't stalled. If you look at the DBA, which is the DBA Agricultural Fund, highs. So I'm in that camp that says yields might not come down, and the idea that these grains that we're looking at have rallied, even though if you're looking at the grains themselves have come down. But if you look at the DBA agricultural contract, oh my, look at this, soybean at a lower low. You see what I was talking about in a mixed market? And corn is the only one that's really holding. So here you have in the whole area of commodities, you got the DBA Agricultural Fund, and yet some of these commodities are tanking, and yet others, like CC, as I say, all-time highs, or at least multi-year highs. I don't know if I can go back far enough. And KC. Let's just have a look at live hogs. Yep, they're pulling back. Oh, they had a very good rally. Now they're pulling back some live cattle. Yeah, also very good rally, almost at the recent highs. So, yeah, this is what I'm saying, that you've got to be in specific areas. You know, we're talking about QUBT. This is the quantum stock. This is quantum computing, tootling along sideways in the fives just the other day. Whoosh, today it hits 24.20. It's trading right now at 19.72. It's only up 17%. But look, that's what's happening. The money is starting to flow into other areas. And as long as that happens, it means that some of that money will come out of more secure areas and go into these more speculative areas. But I think we're only starting this whole thing. So I'm anticipating some big pullback with the newcomers to these stocks. And then these stocks start another big move to the upside, almost like AIQ did. You remember AIQ? This is the AIQ Global Artificial Intelligence, almost at an all-time high right now at 40.52. Very nice action. It's the rectangle formation right here that says it should retest that previous high. And then you've got to be careful if it doesn't pull back halfway into the rectangle. But so far, this is fantastic. But look at the way it started off. Look at this. Look at those big pullbacks right here. I mean, in this area, the speculative area, of, in this case, artificial intelligence, but in speculative areas, you get that. You get this where everybody suddenly piles on, and that's where you get your biggest pullback, and then they have to start all over again. And that's what I'm anticipating. So we had Palantir, which is a different kind of a company because it's extremely robust. The moves to the upside have concurred with all the technicals complementing the move to the upside. Yes, it's pulled back a little bit from the 80.91 high. It went down to the 69s. That's a bit of a pullback, and now it's in that middle of the rectangle zone. So it's taking a bit of a rest. I'll be back in a moment. Basil Chapman, Tiger Munitions Hour. The Dow's up 229. We're getting that spike. Let's see if that continues and it doubles after the Fed speak, or it pulls all the way back.
The Tiger Dollar Holiday Double Bonus Sale 2024 is here.
Amazing money.
Now through December 23rd, we've doubled the bonuses. Don't miss your opportunity to get a double bonus up to 40% on your Tiger Dollar purchase. Here's how it works. Purchase 500 Tiger Dollars and receive 100 bonus Tiger Dollars. That's a 20% bonus, $600 total. Purchase 1,000 Tiger Dollars and receive 300 bonus Tiger Dollars. A 30% bonus, $1,300 total. Purchase 1,500 Tiger Dollars and receive 600 bonus Tiger Dollars. That's a 40% bonus, 2,100 total.
Wow!
But you have to hurry because this Holiday Tiger Dollar Double Bonus Sale ends on December 23rd. Visit the front page of TFNN for details and get your Tiger Dollars today.
Ho, ho, ho! TFNN. The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So I was asked about AVGO, which is Broadcom, and it made an all-time high yesterday, up in the 250s. What did it hit? It hit 251.88. And there was a round number. No, there wasn't. Yes, there was. A 258 round number close. So how can it be 258 round number close? Am I reading that wrong? 250 close, round number close. And it went higher than that. And now that was 3 days ago, and it's now pulled back. I'm just saying to you, and the question is, what am I looking at? I'll just sum it up in a few words here. So I wanted to do that. And one question came in, and that triggered up a thought in my mind. Yeah, Tesla. So we could see, and this is not unlikely, and this is the kind of thing that might happen. We might see these leaders take a little bit of a breather, and whatever the Fed says, it gives those laggards, and I would put them in this category. The IWM is one, the Dow is one, I would like to put in the XLF, but together with the KRE, the regional banks, and I'd like to see some kind of weighting. So the others take a bit of a breather, and these guys they don't have to go anything crazy, but they move upside very nicely over the next 2 weeks into the close. To me, that would be the rationale that we've seen throughout the year, where there's a rotation through different sectors and we get high-level consolidations. So that's my position right now, and we're going to be trading that position as it moves. We've only got one short right now, and that's got a very tight stop. We've taken profits. We've got out of some positions. I want to get back into some of those positions. So with that said, I'm going to say if the Dow is up it's up to 10 right now. If it's up over 280 after 230, that's a really good sign. If there's a big reversal, that's not such a good sign. And if the S&P suddenly goes up 32 points, that's a good sign. If it gives back,